So this is the final section 6 of 6, the QBO payroll certification exam. Again, this has to be done by the 17th because they're revamping everything. So we're starting off with payroll and profitability. So as I said, sections 4, 5, and 6 are that last training section. So I'm ending the end of period procedures. And there's a few things that I revisit. All right, so we start off with payroll and profitability. With QuickBooks Online Payroll enabled, both wages and employer taxes will be assigned to the projects that were used when entering time. Payroll costs are usually a core ingredient of ongoing project costs, but workarounds were needed to tie payroll data to a project report until recently. QuickBooks Online Payroll Premium and Elite users also have free access to QuickBooks Time, which allows a customer to track time for customers and projects. Payroll expenses will only be allocated to projects if using time tracking. To do this, enter the project name in the customer fields and a pay item in the pay item field. If the payroll setting is set to copy hours from employee timesheets, the total time will automatically populate the paycheck. If you enter time after payroll related to that period is run or edit the time on the paycheck, project labor reporting won't be accurate. Payroll costs will be visible in the project center only after payroll is processed. After payroll is run, you can see the total project cost, including payroll, when you go to project dashboard. Select any of the active projects in the project dashboard to view the project detail screen. Here are all the costs associated with the project broken down into two categories: cost of goods sold and expenses, by account including payroll expenses. Select the payroll expenses line and you'll see a report that shows all the related payroll expenses. You can run a profit and loss by customer report to see the allocated payroll expenses by job for each customer or sub-customer. Customize the report to include all dates. To make this report manageable, filter the report for each customer or sub-customer job. You can use this same report to track projects. When a business has employees with different pay types, it can be hard to see where efficiency and consistently profit, or consequently profit, can be increased. When you have a mix of salaried employees and staff paid by the hour, it isn't always clear if the balance is right or if the clients could save tax by changing the type of the pay that employees receive. The payroll setting menu is accessed by selecting the gear icon, and it's the first place to go for payroll customization. The default options work fine for many clients, but in this lesson, we'll be looking at the changes you can make. So remember that article I showed you in the last section about the account preferences? Here's where we address it. So this lesson is going to focus on account preferences options. These are some differences as far as the user interface there are some differences in the user face for core, premium, and elite, but you perform all of the following tasks at any subscription level. First, let's look at what can be edited in that account preferences option. You can edit the payroll bank account, payroll wage expense accounts, and that's your wage account for department tracking, owner salaries, admin wages, shop wages, and so on. Company contribution expense accounts, tax expense accounts, and employee tax expense for payroll, tax liability accounts, which we'll cover later, other liability and asset accounts for things like garnishment, tips, medical insurance, and so on, and class tracking settings. We'll look at this also a little bit more in depth. On the employee record, you can add deductions and contributions for health insurance, retirement plans, flex spending accounts, HSA plans, other deductions, and payroll printing setting and email preferences are edited in the payroll settings. So, payroll accounts for wage costs and tax payments. When payroll is enabled in QBO, it sets up default accounts for wage costs and tax payments. But some businesses will benefit from customizing these settings. So, getting the detail that they need is easier. Editing payroll wage expense accounts means you can specify wage accounts for different types of wages, such as owner salaries, admin or sales, or direct labor. For example, a construction client might want to set up new expense accounts such as these in the chart of accounts. So they might have type expense, detail payroll expenses, name sales staff. Type would be cost of goods sold, or detail cost of labor, cost of goods sold. and name construction wages. So, and the same thing for almost any other company that has different departments. So you might have a sales staff, an office staff, a warehouse staff that you would want to set up the different wage accounts. Customizing payroll setting. Using customized posting accounts allows your clients to group employees together so their wage costs post to an account that better reflects the activity, job type, or employee role according to the client's needs. To do that, you would select gear icon and go to payroll settings. This opens a menu. Here you would select the pencil icon next to accounting. And on the accounting preferences screen, we can see that there are default settings. If it's your first time on the screen, you'll see a customize option. Select this to start making edits to a new payroll setup. On all subsequent visits, you'll just be able to dive right into, making your edits via the pencil icon. Select the pencil icon for wages expense. There will be 3 radio buttons. The first option is a default with all employees' wages posted to that same singular expense account. So let's say wages expense. Note that we now have drop downs for each listed employee. Here we can select expense accounts for each employee. For office staff, you'd be able to select office wages. For sales staff, sales wages, and etc. We can now allocate wage expense accounts to each staff member according to their job. Select the appropriate account for each employee. This process will apply to future transactions, but you can choose to have the change apply to historic transactions by entering a starting date. Pro advisor tip. If you have closed your books, you may choose a more recent date than your close date and then select update. When finished, you can check the changes made by going to the navigation bar, going to accounting and chart of accounts, and then looking down and seeing if you see the expense accounts office staff. And then you can select run report and see what's there. Let's look at another option for expense accounts, allocating costs by the type of wage, such as hourly wages. You could do this by selecting each employee's wages are posted to different types of accounts on the customization screen, as you can see in the screenshot to the right. So you see here, each employee's wages are posted to different. By setting up pay types such as salary, hourly, or commission, clients can drill down to see payroll cost detail. This works well for a business that uses different pay types for different positions. It also enables clients with different departments to see all payroll expenses by each department. Another option is to track the employee's employer payroll tax expense by employee. This process is similar to tracking by wage type, but we map employee-related employer tax costs to different tax expense accounts this time. So you're going to go to the gear icon, payroll setting, go to the pencil icon next to accounting, and then you're going to go to the pencil icon next to employer tax expense section. Complete the information using the 3 drop-down boxes beneath the question, where do you track employee taxes that you owe liabilities in your QuickBooks chart of accounts. As before with wages expense, the default is that employer taxes for all employees go in the same account. Let's make a change. So select employer taxes are posted to different expense accounts for different employees out of one of the 3 selections. We've already set up an expense account for sales tax teams in the chart of accounts as follows. So this is what it's named. Sales staff payroll taxes. Now select the drop down for, let's say, this is the example they have in the training, George Lundy, our construction team member lead. So we're going to select construction payroll tax expense and then click continue to confirm the change. This will apply to future transactions and then you would click done. Class tracking for wages expense. Another way to categorize wage costs is by attributing employees or different groups of employee wages to a class. This allows clients to run a profit and loss by class report and see payroll costs assigned to a class. To do this, clients must have class tracking enabled in the advanced section of your accountant settings. To do that, and then we're not going to do that because you should know how to do that. Now you would go to gear icon, payroll settings, and then you select pencil next to accounting, and you'll see the account preferences window. Look down the list and go to class tracking section and select the pencil icon. Then it'll ask, how do you want to track classes for payroll transactions in QBO? And we can select from the following options. I do not use classes. for payroll transactions. I use the same classes for all employees, or I use different classes for different employees. So if you were to select I use different classes for different employees, then select okay, currently you can only assign okay. Oh, this is key right now. Currently, under QBO, you can only assign one class per employee per paycheck. Obviously, this is something QBO is, as they expand on payroll, is going to want to change at some point. But as of right now, they currently only assign one class per one employee per paycheck. Once you begin using, obviously, something like a construction company would suffer at that's such a limitation. Once you begin using class tracking, then you can run a report to see profit and loss by class. You can go to reports from the left-hand navigation, scroll down and select profit and loss by class report. It is not uncommon for state and federal tax agencies to change their tax rates or payment schedules. So we're going to look at that, setting that up. And over time, your client and business can also make changes. So for example, if you're late, your tax rate might go up. Or if you've consistently paid your taxes on time, your tax rate can go down. Either way, adjustments to tax settings can be needed to keep the company compliant with tax regulations. Every year, the state agency responsible for state unemployment insurance, SUI, will inform you about the company's tax rate. The SUI tax rate is based on the company's history. The less unemployment insurance a client worker collects, the lower the tax rate. Naturally, any change to the SUI tax rate needs to be updated in the QBO payroll for related tax liabilities to be accurate. On the next slide, we're going to look at the steps. So you're going to go to the gear icon. Under your company, you select payroll settings. Go down to the state tax section. Scroll down to state unemployment insurance section and select change or add new rate. Now we enter the new rate as a percentage. Enter the effective date. This is provided in the notice that the state sent you, and then select OK. If we go back, we'll be able to see the change has been confirmed. Changing federal tax schedules. There are two deposit schedules for federal tax income. It's either monthly or semi-weekly. Before beginning each calendar year, you or your client must determine which of these two deposit schedules you're required to use. The deposit schedule a client uses is based on the total tax liability report on Form 941 during the look-back period. There are special rules for Forms 944 and 941. Schedules for depositing and reporting taxes are not the same. So to change your tax schedules, you would go to the gear icon, payroll, settings, go to the pencil icon next to federal tax, change or add new schedule, that's what you'd select, and then select the new filing and deposit schedule from the drop-down, then select an effective from date, and select OK. Note the information in the pop-up after making timely payments, and select OK to close. There are situations when there's a need for a designated third party to file tax forms. In these cases, a third party designee and paid preparer information can be added. To add their information, follow these steps. You go to the gear icon, payroll settings, pencil icon next to federal form preferences, change the third party designee and paid preparer information to yes, and complete the information as required. Select OK. Direct deposit information. Clients can update their payroll banking information or add a new bank account in just a few simple steps. So get the bank account information. It may be possible for the client to use their online banking user ID and password or use their routing number or account number from a check. However, they can't use the routing number from the deposit slips. The client may also need to provide the physical address of their principal officer, which can't be a PO box. As a licensed money transmitter, QuickBooks payment must comply with all legal requirements and regulations. The payroll bank account must be set up in the chart of accounts so that the payroll transaction posts the correct register in the QuickBooks Online Payroll. Clients may need to change existing bank details or add a new bank account. Here's how to add the new bank account. Go to gear icon, chart of accounts, and then new. Go to account type, select bank. The detail type, you're going to put in the type of bank account. Give the account a name, add a description if necessary. Select the time period for when you want to start tracking your finances from this particular account, and then select save and close. Checking for pending tax payments. So on the left-hand side, go to taxes and then payroll tax, select payments or the tax payment tab. Payments with the current date or later will be taken from the current bank account. Contact QBO payroll support for help handling payments with any future payment date. Checking for pending payroll transactions. Select payroll and then go to employees. Then select paycheck list below the run payroll button. If there's any paychecks dated on the business day before the current date or even earlier, then the funds will be taken from the current bank account. If there are any paychecks dated 2 business days or later from the current date and it was before 6 p.m., then you may delete them to prevent the funds from being taken from the current bank account. Select the box next to each paycheck and select the delete button above the paycheck. Don't worry, you'll add the paychecks back later in the workflow when we change the bank account and in the account preferences screen. So now it's time to change the bank account. So you'd go to gear icon, payroll settings, and then you would scroll down to bank accounts. You would select the pencil icon, allowing editing, and then select update, add a new bank account. Select one of the bank listed and enter the online banker's user ID and password. Alternatively, you can search for the bank name and select and enter the bank information manually with the routing number and the account number, and then select save, and then select accept and submit. If you can't change the bank account, then you can complete it from a form that you can upload. QuickBooks Online will then need to verify this. They'll do a test transaction within 2 to 3 business days. So there's a few things you need to be aware of this transaction. The transaction will appear in your bank statement after 2 to 3 days. The amount that had been debited or credited, it will be less than $1. And your client should call the bank to check and verify the amount. The client needs to make sure that the test transaction is cleared and it's not just pending. To verify it, you'd go to payroll, and in the overview tab, you'd go to the to-do list, find your check your bank account item, and then select edit, select verify amount, enter the amount of the test transaction without any decimals, and then select verify. Excuse me, I'm sorry. Now that the bank account is verified and ready to use with the payroll service, the last step, which is also a very important step, is to change the bank account in the accounting preferences. This will ensure that payroll transactions and tax payments are posted to the correct account. So then you, last step, would go to the gear icon, payroll settings, go to accounting, go to the pencil icon, and in the paycheck, payroll tax payments, select the pencil icon so you can edit it, and then from the bank account dropdown, select the account set up earlier, and then select continue. Finally, go done and then done. Now everything should be done correctly, and once the bank account is updated, you can recreate any paychecks that you might have deleted earlier. Okay, direct deposit increases and fund time requests. As a client's business grows, they may need to increase their direct deposit limit and funding time. Both of these requests are quick and straightforward to complete in QuickBooks Online Payroll. To request a direct deposit increase, you go to the gear icon, payroll settings, pencil icon next to direct deposit, and then select the link request higher limits, and then follow any on-screen instructions. Funding time refers to the time between when you run your payroll and when employees actually get paid. Clients may see the following funding times depending on their subscription level or circumstances. You can have same day. Workers get paid the same day that the client sends out the payroll. This is only available with premium and elite subscriptions, and remember the deadline is by 7 a.m. Then they have next day. Workers are paid the next banking day after payroll is set. This is for all QuickBooks Online payroll services. Then you have 5 days. Workers are paid 5 banking days after the payroll is sent. This option is only used to reduce the risk for either a high value payroll or while they're building their credit back. Maybe they had some sort of NSF issue, which we'll talk about later, how to deal with that, and they're building back their credit with QBO. Banks sometimes impose a funding time of 5 banking days to businesses who have had payments failed, like that NSF, which I'm going to talk about later. This 5-day funding time is usually in place until the business rebuilds its credit. Clients in the situation can request a faster refund time online. To do so, they'll need to upload 6 months of their most recent bank statements. The amount of money deposited via direct deposit can also be adjusted as a result. Let's look at how to see funding time. So you go to your gear icon, payroll settings, and then scroll down to direct deposit. And then there you'd be able to see your funding time. Resolving NSF transactions. Some small businesses struggle with cash flow. There could be a risk that wage payments fail due to non-sufficient funds in your bank account. You want to set up notifications so that your client knows as soon as possible if their pay run fails due to that non-sufficient fund. You can help them diagnose what caused it, and most importantly, you want to help them resolve this issue and that NSF holds as soon as possible so their employees can get paid. When using QBO payroll, a debit is made the day that the bank deposit doesn't go through. So what happens is the deposit doesn't go through, and then immediately a debit is tried again. If the debit for that deposit, direct deposit or tax payment was returned due to the issue with the bank account, the account is put on hold. This will lead to a balance being due. When an NSF hold happens, QBO sends an email to the principal officer or the primary principal listed on the account. The message has one of the following subject lines: important, direct deposit payment unsuccessful, urgent issue with the payroll account for, and then whatever the business name is. QuickBooks payroll services action required, payment requests for failed payroll debt, or QuickBooks payroll services action required, partial payment received. If they still can't find the email, contact the QBO support team to check the accuracy of the contact information. The email sent will be to the primary officer or the primary principal, and it'll have a code and an explanation for why the NSF occurred. If the debit was rejected due to insufficient funds, that'll be RO1, or uncollected funds, that'll be RO9. Another attempt to debit the account for the amount due would be made. Like I said, immediately when it doesn't go through, it'll try one more time. The second attempt is made the same day that the return notice from the bank is received. The payroll service is put on hold for 5 business days to make sure the debit goes through. So as I said, when the very first one doesn't go through, a second attempt is made immediately, and then you have a 5-day grace period to see if it goes through. The client will also receive an email to confirm if the second attempt to debit the account was successful or not. If the second debit attempt is successful, there's nothing more to do. The hold is removed and payroll process can resume. It's not always possible to stop the automatic attempt to debit the account, but you can call 866-729-2402 for help and instructions to send a wire transfer. There's also an option of using VersaPay, and that would be something where you could be able to pay it immediately through funds, and then you probably have to contact the number. And then also, if the principal has checked their email and they have this, I think they would have also an option for you can wire transfer monies. Step 2, you can ask the bank to request a wire transfer or use VersaPay. So you yourself, the principal officer, or your client can contact the bank and see if they'd be willing to do a wire transfer or use VersaPay. Again, you can use this number. Note that the wire transfer cannot be completed through online banking, and a QBO can't accept cash, checks, or Western Union. Step 3, if the debit was returned for any other reason, you would have to work with the bank or change the bank account. If in the email received there's a reject code, and a reason. In some cases, the bank may need to be contacted to verify it can accept QBO. So it could be that you have the funds, but for whatever reason, the bank is not allowing it to go through. You would have to do whatever you can on your end with the bank. An employee's direct deposit can be rejected for several reasons, including an incorrect account number. Okay, so this is on the employer-employee side. So an employer needs to pay their employee, and there's a rejected direct deposit on the employee's bank side. So it could be that they, by mistake, put the wrong bank account in. And here are some recommended ways to resolve a rejected bank deposit quickly. An employee action. So the employee can call their own bank and find out and trace the payment and find out why it didn't go through. The employer can request a trace from the bank. QBO's action, the team can contact the bank and see what's going on with the funds, or you could just process a paycheck. If unable to retrieve or send the original deposit through the above actions, the client could obtain a new direct deposit information to a new bank or process through a manual physical paycheck and reinstate the funds. Time off policies and accrual rates. So clients with employees need to track hours worked so that they could calculate any paid time off or vacations that the employee has accrued. Although straightforward to do, some of your clients will need to set up time off policies and accrual rates. Things to consider are, should vacation pay accrue by hours worked or by time period? Are there any state laws in place regarding sick pay policies and time off? QuickBook Online Payroll, by the way, there's no federal, I mentioned that in the last one, but there might be state laws regarding that. QuickBook Online Payroll allows you and your clients to set up processes to cover various policies for both paid and unpaid time off. You can create the following types of policies: sick, vacation, PTO, and unpaid time off. The following pay types trigger accrual of paid time off, unpaid time off, sick pay, vacation pay, and holiday pay during payroll processes. Hourly pay, salary, overtime, and double overtime, commission, and bonus. For each policy, you can choose how you want your employees to accrue paid time off, unpaid time off, sick or vacation, or holiday hours. Employers can view time off balances by either their most recent paycheck detail, the vacation and sick leave report, which you can get from reports. So you can go to reports, payroll, and then vacation and sick leave. And then an employee's time off balance will automatically carry over to the new calendar year unless you have it where it's a use it or lose it policy, where at the end of the year, no accrued time goes into a balance of the next year. So here are some of the accrued time off policies. You can set up an accrued rate at the beginning of the next year. So you can allow them where they have, their balance typically go over in January to the next following year. You can also set up accrued rate for each pay period. So it'll automatically calculate accrued time each pay stub, and that depends on how they get paid. So if you work 40 hours a week and you work bi-weekly, then there would be 26 payments. So you would divide 40 by 26, and this would be your rate. You could see here from the table. Or if you were weekly, that would be divisible by 52. If it was monthly, you would divide it by 24 semi-monthly, it'd be divided by 24 because there'd be 2 payments a month, 2 times 12, 24. Or if it's monthly, you would just divide it by 12. Setting up an accrual rate for each hour worked, that's just as it sounds. It's for the hourly pay that the person gets, and you would take that pay and you multiply it by whatever the rate that you have allocated for them. Then you have by the hiring date anniversary, which means that the first paycheck after the hiring date, they would see their accrued time off. And then you could have unlimited time off. So more and more employers are adopting an unlimited time off policy. Some states with sick leave laws include guidelines on applying the law when employers offer unlimited time off. We have added unlimited, so QBO has added that as an accrual frequency option to allow companies with such policies to reflect this accrual type of pay stub on the pay stub. So then you would then see in that on the pay stub, it would say unlimited. Setting up accrued time off. So you would go to the payroll and then employees, and then you go to the pencil icon next to pay column, and then you would go to the how much do you pay employee section. You would select the pencil icon and you would select additional pay types. You would select vacation pay, and then you select rate hours worked. That has to be given to you from the client. If an employee already has accrued vacation time, you would enter that into the current balance field, and then you would select done. Deductions and contributions. Many business owners need to set up deduction and contributions for their employees for issues ranging from child support to medical insurance to workers' compensation. Deductions are voluntary reductions of an employee's wages agreed with or asked for by the employee for purposes such as contributions to medical insurance or prepaid tax benefit programs. Deductions are taken from the total salary as part of a pay run, and it decreases the employee's net pay. Contributions would be what the employer contributes to the employee, and that could be like maybe 401k contributions, or if they contribute to the employee's health care. Then you have garnishments. Garnishments are legal orders that require employers to withhold funds from an employee's salary. When notified for an order to garnish wages, an employer is legally obligated to make the appropriate deductions from an employee's salary and to make direct payments to the designated agency. Situations that incur wage garnishments typically include alimony, child support, default on a student loan, unpaid taxes, and other consumer debt like credit card. So let's look at setting up a garnishment. You go to payroll and then employees. You go to the employee's name. You would select the pencil icon beside pay. And then you'll see in the does that person's name have any deductions? You would select add deduction link. And then you'd select add garnishment. Under the drop down, select the garnishment type. Next, add a unique description so it's clear what the deduction is for. In the case that they have there, for example, was child support, and they put $50. So enter the maximum percentage of the disposable income. So there's certain laws on how much you can deduct from an employee's pay for different situations. You would need to know that information and put that in there, and then you would select save. The garnishment is saved on the employee's page. Next time payroll is run, the garnishment will be taken from the employee's salary, and QuickBooks Online Payroll will automatically set up a liability account as a sub-account to payroll liabilities using the garnishment name of the account name. The garnishment also becomes a factor in payroll reports. The deduction for the employee's garnishment is held in the liability account until payment is made to the relevant court or agency. Normally, you would use a check or an expense. Once payroll is run, go to the payroll deduction contribution report to see the garnishment deducted from the employee's salary when payroll was run. Paying a garnishment by check. Payment for garnishment can be made by either writing a check, if it's mailed, or an expense via electronic funds transfer or being paid electronically. I've even seen people do bill and pay bill. So here is how to record and print a check. You would go to +new, you go to check, and in the payee, you would put whoever the appropriate agency is. From the bank account drop down, you would select which account you want to choose the money to withdraw from. Complete the check fields to the appropriate payroll liability obligation. You want to make sure it's the proper one that you designated. And then select print check option if you want to print it now, or print later if you choose to print later, and then select save. The other option is EFT expense. So you go to +new expense, and in the payee, you would do again, you would select the agency. In the payment amount, you'd put that amount, payment date, payment method, category detail, category drop down, you would put the liability account, the amount, the tax, and save and close. All right, health insurance, benefits, and contributions. Health insurance is set up in a similar way as a garnishment. Contributions, deductions, and garnishments are configured in the same section of an employee's profile within QuickBooks Online Payroll. QuickBooks Online has partnered with Simply Insured to enable payroll customers to purchase group health insurance plans for their employees. Simply Insured enables us to offer QuickBooks Online Payroll customers with the following benefits: access to quotes on every health plan across all major insurance carriers, ensuring the best price and the most options to pick from, full suite employee management from right inside QBO Payroll, 100% digital platform and integration with payroll enabled automated deductions and one-time click renewals, and valuable insight from employee dashboards. So from the left-hand navigation bar, select payroll, then employees, choose the employee name from the list, go to the pencil icon beside pay, scroll down to the section does the employee have deductions, go to add new deduction. Select deductions, contributions, or garnishment. You want to make sure you select deductions and contributions. From the deduction contribution box, select Simply Insured Medical, and then the amount, and then select OK. and done. You can see the deduction on the employee's detail page. Later, when we run payroll, the deduction is taken from their salary, and QBO Payroll will automatically set up a liability account as a sub-account of the payroll liabilities using the deduction as an account name. The deduction also becomes a factor in payroll reports. So if you go to reports, and in the payroll section, select payroll, deduction, and contributions, you'd be able to see it there. For a specific employee, you can go to reports, go down to payroll, and go to payroll summary by employee, and still see it there. Retirement plan deductions and contributions. There are many types of retirement plans that businesses can choose from depending on factors such as business type, number of employees, and who will contribute. When setting up your retirement plan in QuickBooks Online, it's important to know there are deduction limits that must be entered to ensure that your business stays compliant. One limit is for employees under 50, and the other is set for employees that are over 50. So I'm not going to get too much into it. I did find a site through IRS. Let me go down. There we go. So I went to this site, and basically here's the contribution limits. So under Roth IRA, it's 6,000 or 7,000 if you're over 50 or 50 or older, sorry. Then your 401k plan for 2022 was 20,500. By the way, this was 2022 also. Simple IRA, remember that's for small businesses. Those were 14,000 in 2022. And then catch-up contributions are for 50-year-olds and older. It was 6,500 in 2022, and catch-up contributions for simple 401k was 3,000. All right, and I got that from the IRS website. So it's just telling you to be compliant, you need to be aware of that. So you can't go beyond that. So you need to make sure you put those limitations in when you add your retirement. Setting up retirement deductions. So you would go to payroll and then employees, find the employee name, go to the pencil icon beside pay. Does the employee have any deductions? Add new deduction. Under the deduction contribution, you would select retirement plan. Okay, then you would put the provider, put the amount per pay, and then select save, okay, and then done. Workers' compensation insurance. This protects employers from the financial risk of employees being injured on the job. This insurance covers employees' medical bills and lost wages and legal expenses associated with each specific case. All employers, except those in Texas, are required by law to carry workers' compensation insurance for their employees. There may be exceptions, so you should check with your state. A workers' compensation policy is unique to a business and depends on many factors. So, for example, what industry you're in. So, I'm a teacher. It's very unlikely that I'd hurt myself at work. Whereas if I was a construction worker or a police officer, that would be, or a firefighter, it would be different. So it depends on what industry, how many employees there are, what kind of work they do, and so on. 4 states, North Dakota, Ohio, Washington, and Wyoming, require that you get your workers' compensation insurance directly from them as the state. In other states, you can go to the state for workers' compensation, or you can get it through a private insurance provider. There's traditional workers' compensation or pay-as-you-go worker compensation services. So you would need to know what that setup is. There's some notes here for you if you'd like to take it down. Terminating an employee. So if a client terminates an employee for any reason, including discharge, layoff, or resignation, they must pay them for all the time owed. How and what they pay depends on the agreement they have with their employees. There's also need to be compliant with your state and federal tax laws. Severance pay is a payment package offered to employees based on the length of service and salary requirements. There are no requirements through FLSA for severance pay. Severance payments are subject to irregular federal taxes. Severance can be paid via regular or unscheduled or bonus commission paycheck. If paying severance pay as a bonus or commission, supplemental withholding taxes, which we talked about last time, would be used there. It's also possible to create a severance paycheck using a severance pay earning type. FLSA doesn't require payments for time not worked, such as vacation, sick pay, or federal or other holidays. However, the company may still reimburse you based on whatever employment agreement you have. Final check for a terminated employee. While some terminations will be determined in advance, such as laying off employees, others may not be, such as dismissal, let's say for someone of gross misconduct. As a payroll specialist, you have to calculate and prepare both scheduled and unscheduled final paychecks. You would go to Payroll Center, Employee tab, select Run Payroll. select the payroll payment schedule. For hourly employees, enter the hours worked in the final pay period. For salaried employees, adjust the salary to be paid according to the time that was worked. Adjust the salary if necessary. You can select salary amount and then adjust salary this time only and put the specific number there if you need to, and then you would select apply. Step 4, you would need to add any bonus, commission, or PTO. Note that not all states require payment of PTO, so always refer to the state regulations, and then also verify any balances due to your employees. So you would select the employee name, scroll down to how much do you pay employee section in the pencil icon, make a note of any balances due, then return to the run payroll screen, enter any balances due to the employee, then select preview payroll, check details. If everything's correct, select submit payroll. Changing an employee status. After creating the employee's final paycheck, update their status to remove them from the active employee list. So you'd go to Payroll, Employee tab, search for the employee, and then select the employment section, select the pencil icon to edit, change the employee status from active to not on payroll or terminated, and then select done. Terminated employees no longer will appear on the active payroll list. However, their profile and pay records will still remain in accounts, for tax purposes. Note, if there aren't any paychecks created or pay history for that employee, so let's say you hired someone, they never showed up, then you just want to take them out. So you would go to Payroll, Employees, All Employees, Active Employees, select the employee to delete, and from the actions, you would select Delete Employee. Yes. If a company receives tips, so let's look at tips and gratuities. Let's say they receive their tips through the point of sale, the POS system, and will later pay their employees the recorded amount. They can use the QuickBooks Online Payroll to pay those tips in their employee's paycheck. For each employee who has paid tips, you need to add the feature. So you would select the employee's name from the employee screen in payroll settings. And in the employee detail section, edit pay. So you'd go to the pencil icon. Find part 4, how much do you pay the employee? Select the pencil icon next to additional pay types, overtime pay, commission, reimbursement. Step 2, you would go to even more ways to pay. It's not common, but that's what you need to select there. And step 3, you would choose paycheck tips and then select done. When running payroll, add the amount of the paycheck tips to the paycheck tip box. QuickBooks Online Payroll will add it to the paycheck and calculate tax correctly. In step 5, QuickBooks Online Payroll will debit a paycheck tip account for the actual tip, credit tax payable for the tax paid on the tip, and credit cash for the amount paid out. You may also have cash tips. So, excuse me, during the course, let's say they work at a restaurant, and during the day, customers are paying cash tips. Those still need to be recorded. So when they're recorded, the employee takes the money home with them, but they have to report it to their supervisor, and that supervisor has to then put that money toward their pay. So this covers situations where tips are already paid out in cash, either from the drawer or directly to the employee from the customer. At the end of the shift, the employee calculates any received cash tips. Let's see how this works. So the setup is the same as paychecks. So just a second ago when I gave you steps 1 through 5, the only difference is in step 3, instead of paycheck tips, you would select cash tips. No, cash tips the employee already received. And those can be larger than the wages. So what do we mean by that? So you might have gotten more cash tips than what you actually get paid hourly. So if that's the case, QuickBooks Online Payroll won't allow for a negative paychecks. So it'll then adjust the taxes and result in a net paycheck of 0. So they wouldn't get a paycheck, and any remaining balance that the employee owes in taxes will be corrected in the next available paycheck. Employer taxes are calculated as usual. So here we have the questions, and there's only 2 at the end that I didn't answer, and I'll allow you to answer them if you want. I didn't care for them. All right, here are the questions. When viewing the tax payment history screen, what information is visible? You can see when the tax payment was cleared. So in the tax payment history screen, you can see when the tax payment was cleared. Which of these can you change in the payroll settings section of QBO on QBO Payroll? You can change the federal tax schedule. An owner has been notified that his company is going to have an audit from the state unemployment office. What are two places they can export prior tax payments into Excel? They can go to Reports, Payroll tax payments, select the date, run the report, share, and then export that to Excel. Or they can go to Taxes, Payroll taxes, payments, tax payment history, select date, run report, share, and export to Excel. A company needs to adjust its state unemployment insurance rate at the beginning of the year. I think we just had something very similar to this. Okay, what are the steps to do that? You go to gear icon, payroll settings, edit state, change or add new rate, enter new payroll rate, and enter effective date. Maybe we had this in, oh look, we have another one too. I think we had this in the last one. Where would you go to adjust the state unemployment rate? You'd go to gear icon, payroll settings. This one's a little different. So I guess that's why I gave you both of them. State tax, state unemployment insurance, and then change or add new rate. So I guess they have two different questions with two different answers. But I think they had that in the last one too. All right, Joe has been asked to provide his last Form 941 return to his insurance provider. Where can he locate and view this return? You can go to Taxes, Payroll Tax, Filing, Archived Forms, and then select Form. Where would you go to enter tax payments made in this year but before you began using QBO Payroll? One at a time. You go to Taxes, Payroll Taxes, Payments, Prior Tax History, Add Payment. You might want to opt out of automated tax. Well, okay, why might you want to opt out of automated tax and form features? If you want control over the date, oh, that's right. Okay, so you can't, so the way with automated taxes, you have to pay when it's due. Whereas if you want to control the payment date, then you would need to opt out. So you would want to have control over the date that the tax payments are made. When the automated tax and form setting is on, QBO Payroll will e-pay federal and state tax liabilities. Can the date of the payment be changed? Oh, I just answered that. No. If the client needs to select the payment date, they need to turn off automated tax and forms. The automated tax and form feature is not turned on for one of this person's clients. How would she instruct them to process the payment outside of QBO's automated tax and form feature? The client will submit the payment using Taxes, Payroll Tax, Payment, and then Pay. When you go there, they would take you to your state's website. Upon investigation, a company realizes an employee's direct deposit form was filled out incorrectly. What action needs to be taken to reverse the direct deposit not rejected? So I looked this up and I saw that they had this complete direct deposit reversal form online to reverse the direct deposit. I didn't see that anywhere in the training section. I did have to look that up. So I saw that they had the complete direct deposit reversal form, which is accessible online to reverse the direct deposit. A client received an email from QuickBooks Online Payroll stating that action is required. Their payroll did not go through. They didn't have sufficient funds, and Intuit was unable to allow it to happen. So, matter of fact, they automatically redebit the account. How long do you have to wait? 5 days. That's the answer. 5 days. Excuse me. A business is booming and the owner needs to increase the direct deposit limit. Where would they go to request a higher limit? Gear icon, payroll settings, select the pencil icon next to direct deposit, and select request higher limits. Sorry, my allergies. A client called in a panic because she changed her payroll draft bank account, but didn't update the bank account mapping within the system. As a result, the payroll entries posted to the wrong bank account. What action is needed to take the correct balance? You'd go to gear icon, payroll setting, bank account, edit, enter the routing transaction number and the bank account number. I don't know if that's, I have to look and see if that's correct because I know that you also have to follow through by properly mapping it, which we'll look at in another answer. So let's go to this next one. A company has sponsored a health insurance plan partially paid by the employer and partially paid by the employee. What is the employee's portions considered as? Oh, contribution. That's correct. Your client has a garnishment for one of its employees. each pay period, the employee's portion is deducted from the employee paycheck, and now the owner is ready to remit the garnishment. How does he do this? After he runs payroll, he will process the payment to the garnishment company using the vendor name and deduction amount processed as an expense check or bill payment. Yeah, that sounds right. A company pays out paycheck tips at the end of each shift. How do they set up the paycheck tips to appear in the column while running payroll? You go to payroll setting, employees, how much do you pay the employee? Additional pay types, check paycheck tips. Yeah. An owner received an email from QuickBooks Online Payroll saying, okay, same thing, unsuccessful. What will QuickBooks Online do to resolve it? QuickBooks Online Payroll will redebit the payroll. Yes, they will redebit the payroll bank account that day that they were notified from the bank. Yes, that's correct. A company has a dental insurance plan that is 100% employee paid. How should they record the insurance payment? Enter a check or an expense payment and post against the liability. Yeah, they would pay it by check or expense and then post that against the liability. Your company has decided to enroll in simple IRA. Which deduction type would have that payroll? It would be retirement plan. Yes, simple IRA is retirement. In which of the two places could supervisors see an employee's available time off balance? Yes, from the vacation and sick leave report and from the time off policy link from the employee details screen. Okay, so here are the two questions that I was like, what? So which statement about employees earned time off is correct? And I didn't think any of these were correct. So I'll leave that up there for you to write this question down. But I didn't see applicable answer to this. Somebody did give me an answer, but I didn't agree with it. They had it that the time off accrues each pay period is based on per hours worked, but that's not true because the per pay period is based on the pay period. So if you work 40 hours a week, you divide it by the pay period, meaning if it was monthly, you divide it by 12, or if it was semi-monthly, you divide it by 24. So I didn't see this. I see how it makes sense more than the other ones, but I didn't think there was an answer here. So I'm just going to give you this question. This person submitted an actual question, so that's good. And then here's the last one. A client allows its employees to take 40 hours of paid time off per year. An employee needs to be off with an injury, and a supervisor wants to see how much paid time off he has available. Where can the supervisor not? That's why I didn't like this question. Where can the supervisor not see the current balance of the available time off? Now, in the training section, it says, well, you can go to the vacation and sick leave report. So this you can see. And then you can go to the paycheck details, and you can go to the time off pay policies. So those are the three that they have in the training section. So I would think this one and this one because it talks about time off pay policies, but it doesn't go over how to look at the paycheck details. So I'm not sure if it's this one and this one, but if I had to guess, this one looks a little ridiculous up here, this first one. Payroll, employees, name, paycheck list, view paycheck, print paycheck, benefits, and then paid time off. I would think this first one here is the answer as to how you would not see it. This just seems like a ridiculous trail. So I think the answer is this, but I'm not exactly sure. And I thought this was a really weak question. And as we know, they're revamping this. So I'm sure that they're going to catch all those mistakes because, you know, we caught some ourselves. And then also there's some changes that have been made. So I know this is going to be totally revamped, new questions, new training. So that's why I say get these questions in this last section in before October 17th. All right, good luck and update me on how you did. All right, thanks.